Hello everybody, this is Spencer. Today we've got a quick market wrap-up video for Tuesday, January 22nd, 2019. Fairly interesting day in the markets we had. Here we've got the SPY charts on the daily candlestick setting. And today was pretty interesting because it was the first significant day that we had that was bucking the trend that we've been seeing recently. So just taking a look at these candlesticks, we can see we've been, just like we had this very impulsive move down, we've had just as impulsive of a move up. We're actually just back at about where we started on this move down. But looking at the trend over the past couple of weeks, what we've seen is that just about every single day past this point after the first impulsive leg up, but from here on out, pretty much every candlestick has been either making a higher high or a higher low. And today was the first impulsive day where we had neither of those, where we made a lower high from the previous candle, as you can see here, and we also made a lower low, which is very interesting. Now we've been calling for a small thrust down, and we might have been a little bit preemptive in that when we were calling for it back here about a week ago, but our convictions are still the same. We still think that we're going to see near-term more downside than we're going to see near-term upside. And part of that is just because of the risk reward. There's a lot of overhead resistance that we'll have to go through, whereas below there's kind of a thin zone that we might be slicing through, but we'll get into that later. So taking a look at the hourly chart for the S&P 500, and this we'll look at QQQ as well in a minute, but it's pretty much the identical chart patterns that we have here. But what we saw today was a breakdown in the past 2 or 3 weeks. We've had this nice bear flag forming where you can see that we have this bottom trend line that has a couple of reactions off of it, and then we have this top trend line, and they're kind of squeezing the price together where it keeps consolidating and consolidating while moving slightly upwards. And at some point it was either going to have to break below or break above, and what we saw today was a fairly impulsive move breaking this trend line that has been holding up on the hourly chart for the past couple of weeks. And looking at the hourly chart for QQQ, again, much the same as the SPY chart. We have a nice bearish wedge forming over the past couple of weeks on the hourly chart. It's held up very well, and we're just consolidating up until today when we impulsively broke through. And actually you can kind of see how the candlesticks are, it almost looks like we backtested it or are going to backtest this trend line, so it might be an objective point to enter shorts. I'd also like to point out that on this chart we have very extended but still present bearish divergences, at least on the MACD. You can see the momentum goes from this high peak here and it moves downwards to these two peaks here. It's not a very clear and potent divergence, but it still is present, and it's something to take into account. It's certainly something that leads me to believe that this is just going to backtest off of this trend line before thrusting down. Certainly a couple more percent is what I'm expecting, but we'll get into my targets in a little bit. And so the last thing that we'll touch on before we get into what I'm expecting to happen in the upcoming days and weeks. But just the VIX, so we mentioned this before, we outlined it, but the VIX, the volatility index, was approaching a very nice buy zone for volatility, where you can see there's a lot of reactions. There's a top level that we see some bounce spikes off of, and then there's a bottom support that we also we're expecting somewhere within this point to be a reversal towards the upside, and that's exactly what we got today. We got a very nice pop of about 16-17%. That's a very significant volatility spike that we had. And so as volatility in the markets are going up, you'd expect the markets usually to be going down, fairly correlated with each other, and so that's that. And so getting into my targets for this move down that I am seeing, there's a couple of things that could happen. I'm open to all possibilities, and I'll lay out all of them right now. So the first thing that might happen, and I think that this is probably the least likely of the three, is that today could have just been a whipsaw sell signal kind of day where we have a bunch of signs on different time frames, different charts, different indices that all say sell, and they might just be false. That is certainly a possibility. I'm open to all possibilities. I don't think it's likely to happen, but it's certainly a possibility. And if that's the case, what might happen? We might gap up tomorrow, and then we might form a candlestick that looks. Let me show you. Let me add the drawing. Might form a engulfing bullish candle here that completely fades out the loss that we had in the markets today. In which case, if that sort of thing happens and we see volume spike, we might try to push up for the 200 moving average. That's certainly a possibility. This would be my uppermost bounce target for this past bull run that we had. I don't think that we're going to get there, at least not, certainly not this week. And I don't think we're going to get to the 200 moving average before we have some amount of a pullback. And the second thing that could happen is that, so right now we have a very high velocity in the market. Now what that means is basically we're moving very fast down here. And just how we're moving incredibly fast down here, we're moving incredibly fast up. So maybe we just have a small pullback and a small period of consolidation where we burn out some time without a ton of price action. I think that's probably the likely scenario. And so I'll pull up the hourly charts to give you exactly where I expect it to hit. So taking a look at the hourly charts here, the way that I see it, we just broke down from a fairly, a pretty significant wedge that we had, and we had a fairly impulsive breakdown of it. And to match up with that, we're overextended towards the overbought side. We have bearish divergences in place, so I think it's a pretty objective point to short at this point. And so here we can see points that I'm thinking might be a good target range to aim for. And so what we've seen here is from this yellow line, this price point here that we have moving up. We've moved up without much consolidation, but we also weren't moving very impulsively up. And so what I'm thinking is that we might just come down and test this point where we had this last consolidation zone. You can see a bunch of reactions off this line. Even back here we have a couple of reactions. But on SPY I'm looking at about a little bit above 251 for my near-term target. Maybe we have a bit more of an impulsive move down that brings us down lower towards the bottom of this consolidation zone. And that would bring us down to 245 on SPY. But for me, I'm short right now, and I'm planning on holding up until this point, which is about another 4%. So it's not terribly significant, but there's still some meat left on the bone for this movement if it goes the way that I expect it to. Especially if you're using the leveraged indexes to short it, then you can 4% will turn into somewhere around 10-12%, somewhere around there. And looking at the Qs, we have a pretty similar setup to SPY. You can see this price level at the top of this consolidation zone that also happened on SPY that we just talked about. But it's right around 156 is the level that I'm looking for QQQ to get down. Again, maybe we have more of an impulsive leg down, and that brings us down to 150, a little bit above 152. That's also a possibility. And so again, mapping it out from here, that's about 3.5% to the top target for me, and about 6% to the bottom target. So again, it's probably, if we do have a thrust down, it's probably going to be over the next couple of days. I'm thinking maybe 2 or 3 days top. By the end of the week, we should be down by these numbers if we do have this thrust down, which I'm thinking that we're going to get. And then the last possibility for what could happen now is, rather than moving up directly after today, and rather than having a brief thrust down before we start moving up or consolidating again, there's always the possibility that we see more waterfall selling like we had back here. I don't expect us to test this low, this 233.76 low, in the pretty near-term future, meaning like the next week or two. I don't expect us to come down to that level, but it's certainly a possibility. And so maybe we just come down here, maybe we go through it. Now, if this happens, that actually might set up a very nice long opportunity, because what would happen there is we would end up seeing a lower low price form, but the momentum would most likely be forming a higher low, which would be a very nice bullish divergence that would probably lead us to like a couple months of a nice bull run up. Maybe we would test this high again. I doubt it, but it's certainly an option. I'm open to all options. My analysis is dynamic. But certainly, if you're going to take anything away from this video, my overall mindset is that I see a nice pullback here. a couple percentage points, certainly enough to swing trade. And then after that, what I'm expecting is possibly some consolidation, if not maybe another move up. Maybe we make a very strong move at the 200 moving average before we start seeing more selling or more very sharp selling. But that's that. I'll leave you there. This is Spencer with Numbers Up Finance. If you like the video, be sure to like it, subscribe, leave us a comment. Anything helps us out. We greatly appreciate it. And until then, keep your numbers up.